The following podcast is recorded and produced by Emerge, a media creators co-op.
Welcome to the Defion Productions podcast. I'm your host, the hardest working nobody in Bitcoin, Don. Lot to talk about. We're on a different night, Tuesday night, as opposed to our regular Monday at 6:30. We're doing Tuesday at 8 p.m. I had to buy a new car yesterday, so that's kind of why. Gave me an opportunity tonight to get the gym workout in. That's why I'm dressed a little bit differently this week before going live today at 8 o'clock. Lot going on in the Bitcoin and crypto space. We're going to talk about Michael Saylor selling some Bitcoin. We're going to talk about Mt. Gox moving some coins. We are going to talk about the price, which has done quite a bit of cascading in the last 24 hours and everything else. Bitcoin, we do have typically my producer. He's sitting next to me today. We got him right next to me. He's going to ask me some questions in regard to this Saylor stuff because he was before we went live, and I told him we'll save it for the podcast.
Yeah, shut my mouth until it's time.
And we'll jump right into the charts. We can kind of take a look at what's going on. Let me refresh my screen here. We have a price that is down since we filmed last week, about 12%. It's down 6.4 in the last 24 hours because of many of the stories that we're leading with, the Saylor selling, the Mt. Gox coins, and some other stuff that we're going to talk about. Price is sitting at, this is bad luck, $66,691. The total market cap of crypto at 2.3 trillion. Fear and greed taking a beating, down from about 50 last week to 25. Going down, you just see red across the screen except for Hyperliquid, basically, and Zcash. Everything else is red. Bloody, bloody red. And we are going to start with the lead story on why this is happening. We can take a look at this tweet that we got up here with Michael Saylor, who said never sell your Bitcoin, who said he's going to hold forever, who's done all that stuff. Sold 32 Bitcoin. Worth $2.5 million. Now, there's a little bit of discrepancy with some people out there not understanding or knowing this is not the first time that Saylor has ever sold. Even though many people believe that that's the case because of how he's talked for so long in regards to never selling his Bitcoin, holding forever, yada, yada, yada. This is actually the first time since 2022. December of 2022, they did make a sale. And that was at the depths of the last bear market. Now, to put this into context so people kind of understand what has occurred and what is happening, they own somewhere north of 800,000 Bitcoin, and they sold 32. So in the grand scheme of things, that's like 0.0001% of the total stack that they have. They own like $70 or $80 billion worth of Bitcoin, and they sold 2.5 million worth. Now, I'm not quite sure because he hasn't said and he hasn't been asked. He hasn't spoken in regards to what the point was or why they did it. So we haven't really heard from Saylor as far as I've seen in regards to why they sold, what that was for. But, you know, it's an event. It's a big deal, and it shook markets. The price reacted negatively as we expected. It was always going to probably react. But again, in the grand scheme of things, this is a minuscule amount of the stack. It's not even 10 million. I mean, 2.5 million in the grand scheme of how much they own is nothing. Rich, you were kind of asking me before we went live, like what this meant, or you had seen something. What are your thoughts as, you know, kind of somebody
How many
viewing?
is it estimated that he owns?
Over 800,000.
He sold less than 1%. Right? Because you said he sold 32, right?
Yes.
So he sold like nothing. He sold pocket change, right? 32 of 800 is...
As of June of 2026, MicroStrategy holds 843,706 Bitcoin.
And he sold how many?
32.
32. I mean, that's nothing. That's he wouldn't even, that's like a tip. That, you know, that's not even a tip. That's I mean, I was like, but I mean, I think people's initial
Yeah,
Mr. Never Sell sold. So
the total holdings represent 63.87 billion. So I was
Yeah.
pretty close, between
Yeah.
60 and 70 billion.
well, I mean, maybe he wanted to buy. I don't know what would be the reason that just he needed some liquid cash.
My theory, he didn't need liquid cash. I don't think it has anything to do with that. My theory, which is just a theory, it's not necessarily the truth, it's just speculation. I think he did it just to see what would happen in the market, or just to get it over with, because he has already said, about like a month or two ago, he already said that it's possible, and I believe he said it on MicroStrategy or Strategy's shareholder call, that it's possible they'll sell in the future. So he already kind of opened that door already, and I think this is. I mean, it represents, like, their average buy is like usually like 800 or 1,000 Bitcoin. So this is like 95% less than what they typically buy of what they
I
stole.
mean, like a 32 Bitcoin would be. I'm thinking like some people that might have bought Bitcoin in the beginning and bought 32 of them, like when it wasn't very much. Maybe bought it. At
It's like if your net worth was $832,000
Yeah.
and you went to Target and spent $32.
Yeah, that's right. Right. That's wow. That's a great way. That's so. I was trying to find a way to simplify it, and you did a much better job. Yeah, no, for sure. Like that's, and there is an aspect of it. It obviously it dropped the price, right?
Yeah. Yes.
So in some ways, it's like he can turn around and buy that 32 and he made money. He made old fashioned money, and he literally could probably buy that 32 back now and make money, like, fiat, and buy more than the 32. So it's he probably is just having a little fun with all of us.
that's my theory. I mean, this is another, if you want to toss this chart up here too, this is another thing that's coinciding with Saylor selling that's got the markets rattled. Mount Gox, and backstory on Mount Gox for people that don't know, that are living under a rock, or weren't around in 2013. When I jumped in at the tail end of this, Mount Gox was the place back in like 2011, 12, 13, that when you bought Bitcoin, that's kind of where you stored it. It was on the Mount Gox exchange, and that blew up. And there's been litigation for years on this, and they're still trying to distribute Bitcoin and funds back to people that were victims of that hack. I'm sorry, of that exchange. And Mount Gox, a wallet that's associated with Mount Gox, moved 739 million worth of Bitcoin, which is the first major transfer in 6.5 months. Last time they moved this much was November of 2025, and the price dropped 13% within days. It's happening again, and we're already under 70,000. This was from earlier. This tweet was from 3:34 a.m. And as we saw when we opened the podcast, we're sitting at 66,000 now. So the price dropped another 3,500 since then. So the price is just kind of cascading between the Saylor stuff and the Mount Gox stuff. People are spooked. This is just how markets kind of work, man. It's emotions, and it's crazy. And this is what we see this in all markets, but Bitcoin and crypto specifically, the volatility is just different.
I was going to say that the one thing that I've learned in this time period is that, like, when these things happen, it's always bigger in the crypto market, specifically Bitcoin, but it happens with the other ones too. Like, they go up and down crazy percentages that are very different than your traditional, fiat stuff. So no, it's interesting. And I've been seeing a little bit about, a lot of people are like, really, until I didn't know about this until you came in, but I saw something yesterday that was talking a lot about, like, people are starting to get nervous about some stuff, whether it's there's just all these signs that are out there, like something as simple as oil reserves are the lowest they've been in 20 years or something like that. That is one of those things. We're making a lot of weird decisions. And then even the stuff that the president tweeted something today, like, we're in shambles. He said the United States is in shambles or something like that. We're screwed, or whatever he said, because he has to pay back all this money of the tariffs. He's using it as an excuse to why everything's so bad. And I think, but that is causing a lot of people to react, like he always does.
What has people in Bitcoin in this ecosystem kind of frustrated. If we could toss this tweet up here too by the Kobayashi letter, while Bitcoin is falling and falling hard, stocks and equities are again at all-time highs. And here, this is kind of like putting into context of what part of the market is really up, because it's not, even though markets are at all-time highs, not everything in the market is at all-time highs.
Yeah, no, you're right.
So the U.S. tech sector has rallied 42% over the last 2 months, which is just insane. The largest, put this in perspective, the largest 2-month gain in the last 24 years. So since 2002, which is coming out of the dot-com bubble again, so to put that into context, you're having a huge gain because everything had dropped after the dot-com bubble of 2000, 99, 2000, 2001. And then 2001 happens with the towers getting hit. And then 2002 is kind of when things kind of come back. So that 2 months that you're seeing back then is that huge event that's occurring. So first time since then that we've had a 2-month rally in the tech sector of 42%. And tech was already hot. And now 42% on top of that in 2 months is crazy. This also marks the second strongest rally this century, surpassing even the plus 40% gains during the 2000 dot-com bubble. The surge has been largely fueled by chip stocks, with the semiconductor index SOX rising 66% over that same time period. By comparison, the S&P is up 16%, while the Dow is up 10% over the same time period. Meanwhile, the S&P is up 20% since the March 30 low, with the top 10 stocks contributing 65% of the index's gain. So let me say that again, and let me let that kind of hit. S&P 500 is up 20% since that March 30 low, right? We got all this war stuff going on, the conflict in Iran, oil prices, Strait of Hormuz, all this, uncertainty, things kind of go down a little bit. S&P's up 20% since then. 65% of that 20% gain is the top 10 stocks of the S&P 500.
Right.
S&P 500 is 500 stocks. Right. Okay. So we're all on the same page. 500 stocks. 10 of the 500 stocks are carrying at 65% of that gain.
Right.
Which means the other 490 makes up the other 35% of that.
Right.
My question, how sustainable is that?
Well, I don't think it is at all. And I think like the chip market, for example, we're in trouble with chips. There's a shortage of chips. So Apple's already talking about cutting production because they can't finish the computers because they don't have the chips. And a lot of this has to do with the tariffs. Like a lot of it has to do with again, even some of the materials that get shipped through the strait. Like there's just a lot of things that are happening that are screwing up chip production. And that is going to not help. That's going to accelerate, I think, a lot of this AI bubble stuff. There is like, and I said it last week, there's a little bit of blowback at AI right now, as well as data centers. So there's a lot of things that I order for my company, and they're telling us, we don't know if we're going to get them because the bigger companies are grabbing all the chips because they can go and pay a higher price and just pass it on to the consumer. The smaller tech companies that sell less of equipment, like the cameras that we're using, PTC optics, they're not going to get as much access to that technology because the bigger, stronger companies are going to buy up everything that's in inventory.
So the internet was very good points, by the way. The internet was the big trade of like the turn of the century, right? The dot-com bubble that we go to. Super hot, super revolutionary. It's obviously completely changed how we interact and operate as a society. As big as that was, this AI stuff feels and looks bigger than that. So what goes up must come down. So as big as that dot-com bubble was, it eventually popped. So when this pops, what is that going to look like?
Well, I wonder, and we'd have to look it up. Like, what was the drop on the internet? Boom. What was the drop then? I wonder what the drop was from. You're looking it up. and let's assume it's roughly the same percentage wise.
All right. AI, ironically enough, is what I just used to look this up. The
Right.
dot-com bubble was a historic stock market cycle, 95 to 2002. It's weird. I didn't realize that they started that. I
Yeah.
feel like the time frame was 98, but I guess it's 95.
No, I
guess that
definitely
makes
feel
sense.
like it was the mid 90s.
Okay.
I remember it becoming a big deal.
Driven by excessive speculation in internet startups, the tech-heavy NASDAQ Composite Index skyrocketed nearly 600% from its 1995 levels, ultimately crashing from its peak to its trough as investors realized many of the startups lacked viable business models. The market peaked on March 10th of 2000 with the NASDAQ reaching an intraday high of 5,132.52, closing at 5,048.62. The trough, following a prolonged bear market, holy cow. Following a prolonged bear market in the 2001 recession, the NASDAQ bottomed on October 9, 2002, closing at a low of 1,114.
So it went down by
The crash represented a staggering 78% drop from high to low, erasing over $5 trillion in market value.
So if you equate 78% of where we're at right now, the numbers are almost multiplied by 10. So we would go from 50 to somewhere in the teens theoretically. And everybody seems to say, and you've said it and I've said it, and even my son, who is not an investor guy, but he lives on these he lives on this stuff, and he's like, when it goes down bad, it's going to be bad. He's like, I'm worried, like, even for you, he's like, the stuff that you have in your investments, he's like, and he's right. Like, I'm not going to get it back. So it's going to be,
I looked it up. So today's NASDAQ close was 27,093.
right.
An 80%, which is 70%,
Right.
an 80% drop from the high of today. That's just the high of today.
Right.
Not saying we're not going to keep going up. An 80% drop of today would equal 5,418.78, which would be almost what the top was
Right.
of the .com bubble.
It might
That
not,
would be insane.
The bigger you get, the smaller. It's harder to have that big of a percentage. So my guess would be, it wouldn't be 70. It would probably be like 60 or even 50. But even
you say
that,
you say that, and I know, I tend to kind of agree. Except, remember the 1987 drop?
Yeah.
87 drop was like 65 or 70%, and the .com bubble eclipsed that.
Yeah.
And the 87 drop was the next biggest drop since the Great Depression.
But it's all fake, and that's the problem. And
That's what the podcast is about.
it's-
the
it's-
fiat-based dollars.
It's
Absolutely.
all fake, especially when you look at like like Elon Musk. They say he's going to be the first trillionaire. He does not have $1 trillion. He doesn't. He has things that are supposedly worth $1 trillion.
Assets.
But I'm not sure that it's inflated from the standpoint of, I'm not saying he's poor, but you have to be able to value that stuff. So you have to have someone like it's like having a Mickey Mantle baseball card. I have a Mickey Mantle baseball card, let's say. It's worth whatever. But I have to find someone that wants to buy it. It's not going to sell at that price. So all of his assets, like, he can say how much SpaceX is worth. But given the fact that it blows up every time they use it, I don't think SpaceX is worth nearly to any investors as he acts like, especially since NASA did that whole trip without SpaceX. Meanwhile, what's his face is Jeff's
Bezos,
rockets are blowing
yeah.
up too. So people are like, maybe these guys, we should just, I think corporations are looking at the future of like that stuff. So, I mean, guys like, they say he's going to be the first trillionaire, but is he? Like, he's not, it's not cash.
There's a couple things that have to exist too when you're pricing assets and you try to figure out what your assets are actually worth compared to what you're going to get for your assets.
Right.
When you price something, there has to be one, a market for it.
Right.
And number two, there has to be liquidity available.
Right.
So like stocks, right? When you're selling stocks, there has to be actual, and even crypto, some of the crypto coins, like you can look and see that a crypto coin is worth X amount of dollars. However, if the liquidity doesn't exist, you can't get X amount of dollars at volume.
Right.
People don't understand that that's a thing. They just think they look on a screen and they see, oh, my shit token is worth $3 and I have 1,000 of them. I'm going to go sell it for $3,000. If the $3,000 of liquidity is not available, it's technically not worth the $3,000 that you think those 3,000
here's
tokens
a
are
real
worth.
example for the rest of us. I have some gold that I just sold. Okay, because
Okay.
my mom passed away. We sold a bunch of the gold that nobody wanted.
Okay.
I know what that gold would be worth, but what I'm not going, I guess I could if I wanted to try to get, there's no way I'm getting the full value of that gold myself unless I'm going directly to like,
You'd have to go set up as a dealer and sell as
yes, which would cause me to probably get a license and all these things.
Most of the time
So-
you're selling under spot.
So I'm selling to a jewelry store or a gold person, and they're making their cut because they had to go through the process and evaluate it. So whatever it was worth, I'm getting value for it, but I'm not getting 100%. So it's the same thing for any of this. Like that's what people don't seem
Mutual
to get.
funds is a good example too, because when people own mutual funds, they don't realize that there's two separate prices. There's a buy price and a sell price. So when you buy your mutual fund, you're buying at the buy price, which is higher than the price that if the same person that day sold the same mutual fund that you own, they would get. So you're buying a fund. Let's say that, just for the sake of like easy math, your buy price is $11 for the fund. The sell price might be 10. So when you sell that mutual fund today, you own it, you sell it for 10. I'm buying it and I'm buying it for 11.
And that's a lot of life insurance products too.
That spread is what the brokerage or wirehouse is getting to both buy and they're not making money by owning that and selling it. They're making money on the spread typically.
Right.
Typically. There's obviously situations where they do own some of that stuff, but most of the time there's just the spread.
Yeah.
You're buying it for 10, I'm selling it for 11, and they're making the spread over and over again all day long during trading hours.
Well, it's like the people that sell a car and they on Blue Book and they sell it and they're like, unless you're selling it yourself, if you're trying to sell it to a car person, a car company, whether Carvana or whatever it is, you're not getting what Blue Book says it is. Even if it's exactly what you evaluated on a website, you're not going to get that because that company is going to do their thing and they're only going to give you a percentage because then they have to sell it at auction or whatever they're doing with it. So, and I think that's the same stuff with all of this, except I hate to know I'm sounding like the only thing that you get full 100% of your price. It's your Bitcoin if you sell it. Unless you're selling it on.
There's typically a spread even on exchanges.
But how much? But I mean,
Coinbase has got a pretty big spread.
But not if you're self custody.
I mean, if I sold it to you peer to peer,
right?
It would just be we could agree on whatever that market price is and sell. But when you whenever you sell on an exchange, you're going to pay a spread because the exchange has to make money.
That's what I mean. So everybody's got it, and that's what people don't get. And I do think again back to just the AI. This is a bubble, and if you don't think it is, and you think that all these companies are taking over everything, get out of here. Like it's just they can't all exist. They can't all make money, and only. Like it's the same thing with streaming services. It's the same thing with airlines. It's the same thing with banks. They're swallowing each other up, or some of them just cease to exist. Like you can't buy Saturn anymore. Chevy closed that company. They got rid of that part of their company, partially because it did too good, and Chevy didn't like the way it worked because people were doing better buying a Saturn than they were buying a Chevy. So they got rid of Saturn when they needed to consolidate the company. Like airlines buy up other airlines. A lot of airlines, like Pan Air, like Pan Air doesn't exist anymore. Like it was the biggest airline in the world. They're all going to eat each other alive. And there's going to end up being three or four left that run everything, that control it all.
Another example of markets, just to tie a bow on that conversation that I just thought of was not this tweet. I'm going to go to that next. I'm just spitballing off the top of my head. Gambling with sports books. Sports books set numbers that their goal is to get as equal as possible bets on both sides.
Right.
So you set a number and you want to have an equal amount of money going on both sides.
Right.
So then the money that they make is that vig, the spread that they charge in the middle. So perfect lines are you get $1 million on this side, $1 million on that side. It doesn't matter who wins because you make money on the vig that everybody spends
Right.
of the $2 million on those both of those sides. And a bad line would be a line where it's like 70-30, and then they have to worry about like the 70-30 side winning because then they'll lose money on that bet.
Right.
So that would be another example of like, the spread and how much where the bread's made.
And even if like you were investing in sportsbook companies, like it's the same thing. Like there's too many of them. They can't all make it.
Prediction markets are really taking control as well too.
Like that, or in your local community. How many like weed dispensers are there now in New York State? You can't go 4 blocks, and half of them are closed within a year because they probably didn't have a good business plan to begin with. Sounds like the .com stuff where they didn't have a good business plan, and then they're closed because they're not really like. Obviously, there's going to be weed dispensaries because it's legal in New York State now, and they're going to be around. But which are the ones that are going to make it are the ones that come down to the old-fashioned customer service, who's got the best prices, blah, blah, blah. But, I mean, that's what I think we're headed towards with this AI stuff.
So getting back to the Bitcoin piece, which is what this podcast is about, this influencer who has a lot of followers tweeted something earlier, and we can put it on the screen, and I engaged because it's just, this is what people really think. Layla Halpern, she tweeted, the interesting part about this dump is that it's the smart money selling. The same institutions everyone said would create a higher floor. BlackRock alone has dumped 2.4 billion of BTC in 2 weeks. Smart money doesn't care about, they are here just to manipulate you. And I wanted to kind of set the record straight, so I responded. BlackRock hasn't dumped anything. Investors who hold shares in custodial are investors who own shares in custodial by BlackRock by way of Coinbase have sold. See ya. Fiat maxis who don't understand the problem to ever comprehend the solution. So again, BlackRock does not own those Bitcoin that they buy or that they sell. BlackRock is a custodial for individual investors who are investing in a share through a custodian, which is BlackRock, and BlackRock makes the moves for those investors. So BlackRock isn't saying, hey, let's go out and buy Bitcoin today, or hey, let's sell Bitcoin today. BlackRock is doing what the investors are telling them to do, and they're buying and selling on behalf of them. So BlackRock isn't making any of these decisions. Now, BlackRock may own Bitcoin and do stuff behind the scenes with their own stuff, but what you see that's being filed with the ETFs, that is investor moves. That's not BlackRock moves. And again, like BlackRock doesn't even own the Bitcoin. They hold it for Coinbase. Coinbase holds the Bitcoin. So there's like 3 different levels. It's like the investor owns the ETF. The ETF is custodial by BlackRock, who custodials that Bitcoin by Coinbase. So it's just, I want people
That's
that
clearly
see
someone who posted that is just look at BlackRock's, like they're in it. That person, I have no idea who that person is, but I'm guessing they were excited that Bitcoin looked like Bitcoin.
They're engagement
I was
farming.
right. I was right.
They're
Like,
engagement farming.
Yeah,
Yeah,
they're
they're
just trying
engagement
to do that. So,
and we were talking about prediction markets, and Kalshi Crypto, which is Kalshi's a prediction market, tweeted earlier, breaking, our traders forecast Bitcoin will crash to $50,000 this year. It's weird because I don't know if this is just coincidence or it's really hard to call, because as we sit today, it seems like Bitcoin is tracking kind of how the 4-year cycles are tracking. And I know we've talked about, like, there's not cycles, there is cycles, like all the stuff conversations that we had, but I can see a timeline where in 4 months, which would be October, where typically would be around where the Bitcoin bottom is, that we're sitting at maybe 50K Bitcoin in October. I could see that potentially happening. Doesn't mean Bitcoin's broken, doesn't mean Bitcoin's over. It doesn't mean any of those things. It just means that we may be, I was really thinking that the 60,000 that we got back in, what was it, February or March, whenever that was, right, I thought that was going to be the bottom. I thought there's just too many tailwinds. I thought with Saylor doing what he's doing, with ETFs and people in the Clarity Act, which we're going to talk about in a minute, which that in the Genius Act and all the stuff with Washington and the Trump family, I thought it was going to carry us and we weren't going to go back down past below 60. But with Saylor selling the 32 Bitcoin and with the Mt. Gox moving and with the market reacting the way that it is, we may get sub 60K Bitcoin at some point again. We might go all the way down to 50,000. And I really didn't think we were going to go below 60 only because the last cycle, the 60s were kind of the top of the 2021 cycle. And typically we bottom the next cycle at where the top of the last one was. This last bear market went down to, 19,000, which is kind of the top of the 2017 cycle. And I thought when we hit 60, in this one, it was kind of like an anomaly with all the kind of trading craziness that was going on, and that was kind of going to be our bottom. I don't know. I'm not a trader. This is one of the reasons why I don't trade, and I just dollar cost average, just keep accumulating and don't try to time anything, which I don't think anybody should do. But, I also don't see a tweet like this and just snuff at it and say, oh, their Kalshi crypto's wrong. Like, we're never going to get 50,000. It's to the moon. Like, I wouldn't be keeping it real if I was thinking that, because I do see a potential possibility. I don't have it as my base case. I don't think that's where, in my opinion, we're going to go. But if we did, I wouldn't be surprised, and I wouldn't say I can't believe that happened. I think it's possible. I mean, have we moved since we started this podcast? Because it's been pretty crappy of a day. We're up $100, 66.7. When I was driving in, I got a notification that it was going down to 66 and it was going to break 66. And I saw it at like 66.16 and it bounced. So we got to bounce off 66. I don't know what that means. I don't know if that's some sort of chart squiggly line bounce area. I don't know. I don't chart. I don't do all that stuff, but it's possible. I think we could see 50K, and that would be quite the drop from the 126 high. But typically every other bear market, we've been between 70, 80% from top to bottom. So it's kind of par for the course. It's kind of what we sign up for.
Yeah, what I can understand about Bitcoin is that the swings are going to be big. It's a bigger pendulum than your established stuff. It just is. It's just the nature of the newer stocks. Think of Apple. Think about how much Apple was worth and then how low it was at its worst. And it wasn't even because the product was bad. The products were good. It was more a question of, well, Steve Jobs, they fired him. They actually had to bring him back because they didn't know how to run the company without him. And then when he came back, he had better ideas, to be honest. He even said, like, one of the best things that ever happened is they fired me. But Apple did that. Apple had that huge drop and, oh, Apple's dead. Everybody said Apple was dead. A lot of people who said Apple was dead was IBM, because that was their biggest competition. I mean, who even talks about IBM anymore? Like, it used to be like either you had a Mac or you had an IBM. And now it's like, IBM's not even in the equation. Like, nobody even thinks about that. So, and look how strong Apple is. Obviously they still have computers, but they have all this other stuff too, because they expand. So I do feel like if you think of Bitcoin as it's going to have bigger swings because it's new. As opposed to the more established things that are that don't have the volatility that you talk about all the time.
So the one thing that could kind of turn this around rather quickly would be if we finally got, and again, me personally, I don't really care about this. We can have it, not have it, but I just know that if we do have it, the market will react positively. So I'm trying to keep it real. Like, again, these involvement by the Trump family or by government, by Wall Street, Bitcoin doesn't care. I don't care. It's not going to die. This is all just short-term noise, but we're here to report the news, so we'll talk about it. Clarity Act seems to be very close to getting done, at least according to this article by the Crypto Rover and what President Trump has been saying. And we all know President Trump is super reliable source. The Clarity Act cleared the Senate banking 15-9, which is true. It's facts. Now it faces the floor. Lawmakers are back from recess with a narrow runway to pass it before the July 4th break. Miss that window and it likely slips past the midterms into a very different political landscape. Pass it now. I do think that is true. I do think if they do not pass it before that July 4th break, they're not going to get it done before midterms. And I'm convinced that the midterms are going to be a bloodbath as opposed to the left getting a lot of seats and taking them from the right.
Well, you always say, I'm the guy that knows a little bit more. I follow political stuff.
Yeah.
I'm not an expert, don't claim to be. But the Senate is acting very weird towards Trump lately. His specific Republicans. So he was really going after them about he wanted to filibuster proof this and all that stuff. And I just don't think they want to do it. I just don't think they want to go down that because they're afraid if you start doing the filibuster proof things, if the midterms go the way the midterms are going to go, and they lose the Senate, then they're like, Democrats are going to be like, let's go. And that is something they're scared of. So they're afraid of going down that because they don't want to set precedents because they know they're not in charge forever.
What is that like? What does that mean for the Clarity Act? If you could be a little more specific.
I think the way I understand it, and I'm probably a little off on this, is that he's pushing them that he needs this thing to pass. I don't think they want to pass it. So
why do you think that act specifically, or just because that's the act of and it just happens to be the one that's getting the most airtime?
Right.
It doesn't have necessarily that much to do with the Clarity Act and crypto, just the fact that
I think it's just they're just nervous to be going to the wall for him because it's not working for them. Like it's not going to, some of them are nervous about being reelected and what's going to happen if they're not in charge. And I think some of them are just unwilling to pass because what was the other one? The voter ID one that he wanted. They're not even talking about that one now. They stopped talking about it. Want to know why? Because he knows he can't get it passed. He wanted a filibuster-proof one for the SAFE Act. I think that was the SAFE Act. It's like they're just like, yeah, we're going to talk about it. It's like when your kids want to go to McDonald's and you're like, that's a great idea. Let's talk about it tomorrow. And then you just never talk about it. And then tomorrow comes up and you're like, oh yeah, today's bad.
Yeah.
Maybe Saturday. And you just keep
forget
kicking it down the road. And I think that's what they're doing. They don't want to cross him because they're still afraid of him, that stuff. But at the same time, they're not. I don't think they're going out, and I don't think it has anything to do with the Clarity Act as much as the fact is that they're just not willing to back him right now because they think they're starting to see cracks in they realize that there's cracks in his popularity, that they're not getting enough support. I mean, the ones that are in super red states, they're fine. They'll continue to do it. But even Ted Cruz is like getting a little nervous about his reelection. Like some of them are really starting to, and I think that's what's going on in my opinion, with the Clarity Act. There's nothing to do with what the act's about. He wants it, and they're like, great idea, but we're not sure we're going to get to it by July 4th.
We crossed 67,000 for Bitcoin while we were talking, but I got some breaking news that while we were filming, I just happened to scroll Twitter while you were speaking, looking for something different, and I found this breaking. And this is non-crypto related, but it's important to talk about because it's world news. Yeah. Iran has launched a massive ballistic missile and drone attack, striking the U.S. Fifth Fleet headquarters in Bahrain, along with U.S. bases in Kuwait, Ali Al Salem, and Arifajan, and an oil tanker near Dubai, in response to new U.S. strikes on Qassim Island and an Iranian oil tanker near the Strait of Hormuz, per Tasnim. Iran says it officially abandoned tit-for-tat retaliation, now striking back at least 1.5 times as hard for every U.S. attack, with IRGC warning disrupting the security of the Strait of Hormuz will have a very heavy price for the invading U.S. military. And this tweet down here is absolutely amazing, and I want to read it. Where is it? Where was it at? I just saw it. Damn it! Now I lost it. I lost it, but there was a funny one about. Oh, there it is. Nope, the war is over. Rubio said so today. Trump said so a bunch of times. Fake news. I am not in a cult. Yeah, so I saw that and I just thought I would break that. I do want to pivot to this video. This is Matthew Crater. He was interviewed on a podcast. God, which podcast was it? I forget which one he was on. I wish I could give credit towards it. Great interview. It was like an hour and a half long. This is a 6-minute clip from that interview. This I'm gonna read the quotes at the top because this kind of sets the stage for what he's going to talk about. This is my hardcore belief on what Bitcoin is and represents. I thought this clip was really good, so I wanted to share it with the audience. All of us grew up in a very fiat world, and we grew up thinking in very fiat ways. So we're quite used to abdicating our responsibility for our money. The whole system exists to drain our economic energy and to treat us as slaves, but not let us realize that we are slaves. I think there's going to be many rude awakenings for everyone. I'm convinced the decline is here. This is every year going to get worse in the places like the United States, Canada, Australia, Europe, and the UK. It's a slow motion demolition, and we just have to try to wake up as many people and save as many people as we can. So I'll play this clip, 6 minutes long. Matthew Crater, Bitcoin University, talking about this.
All of us grew up in a very fiat world, and we grew up thinking in very fiat ways, and so we're quite used to abdicating our responsibility for our money. And so if there's a mistake on our credit card bill, we can just call up and have it reversed. If we get locked out of our bank account, if we forget our password, or there's some glitch, or even if our bank account were to get drained through fraud, we can basically just make ourselves whole with a phone call. And so people say they want freedom. People say they want to be autonomous, but people don't want. What I found is that people just want they want privilege without personal responsibility. And so the great thing about Bitcoin is you can completely control your money if you hold your own keys. And very important to add to that, you have to run your own node, because otherwise you're trusting someone else's node, you're leaking privacy. And if they don't want to broadcast a transaction for you, you can't even do it without having your own node. So that's very, very important. I would encourage everyone to start running your own node, download Bitcoin Knots, get yourself a Star9 server, so you really take control of that piece. Because you actually don't even know if you own Bitcoin unless you can verify it with your own node. Like, you probably own it, but you're trusting someone else's node to verify that it's real. So those are the keys: holding your own keys and running your own Bitcoin node. And the problem with this, that the upside is you have complete control, but the problem is there's no 1-800 number you can call if something goes wrong. And if you make a mistake, your Bitcoin will be gone forever, or at least a part of it could be gone forever, and there's no way to reverse a Bitcoin transaction like that. I would say that I used to be perhaps more optimistic about these things, and then I lived through COVID like many of us did, and I saw neighbors tattling on each other and turning each other in, and enforcing government rules on their friends and family. So I'm a little less sanguine that everyone's going to make it and everyone's going to get it. And it's very hard because we're all like zoo animals, and we grow up just getting used to the government taking care of us, and the teachers in the government schools tell us what's true. And then, of course, we're told, we're sort of corralled, like, you got to get a credit card, you got to take out a mortgage, because these things, well, they're actually just good for JP Morgan. They're not necessarily good for you. And so all of us have to sort of, it is kind of the Matrix like situation, the Matrix movie or movies, where the whole system exists to drain our economic energy, and to treat us as slaves, but not let us realize that we are slaves. And so all of us, as you begin to get into Bitcoin, you begin to sort of wake up and realize you can be in Bitcoin and still be taking blue pills, but if you start taking the red pills, you'll begin to wake up, and you'll begin to see how you're a tax slave, and how you're an insurance slave, and how you're a financial product slave. And so this is, not everyone will be able to break free. I thought I had broken free a couple years ago, and then it seems like every year I discover some other way that I'm sort of captured by the system, that I need to, for example, letting other people mine Bitcoin. I realize I should be doing that myself. So we have the spectrum from normie to self-sovereign, cypherpunk, and Bitcoin. And my takeaway is that, especially after COVID, is I don't think most people are going to make it. Hopefully our children will make it, because they're going to be raised in sort of Bitcoiner families. But I think it's just like Noah's Ark. Most people unlike Noah's Ark, Bitcoin has room for everyone to get on board, but most people may get on. You can even see countries that have hyperinflated, like Lebanon or Egypt or various Latin American countries, and most people are not in. We're not in Bitcoin or even in gold or even in hard assets like stacking wealth in terms of buying motorcycles or cars or something to get their money out of the fiat currency. But the thing is, there is a sort of Darwinian evolution at work here, where people who store their money in fiat end up losing all their money. They think they're being safe, keeping it in cash. Maybe they keep cash in a safe, and it just loses all of its purchasing power. So those people get taken out of the economic game, and their children do to a certain extent because they don't have the same advantages. Then you have Bitcoiners who leave their money on exchanges like Mt. Gox or FTX, and they end up losing their Bitcoin. And so it really does. Bitcoin is this weird Darwinian race where people who do it the right way and their offspring will survive. So maybe this will help to shape the human race. But it's a difficult transition, and we still have so many people who still believe everything they see on TV and everything their doctor tells them, and they still believe politician promises. And something like 30% of the American population still believes the U.S. dollar is backed by gold. So I think there can be many rude awakenings for everyone, and hopefully we as Bitcoiners have made the right decisions, and we're prepared, because I'm convinced the decline is here. We are seeing the decline. This is every year is going to get worse in places like the United States and Canada and Australia and Europe and the UK, and so it's a slow motion demolition. And we just have to try to wake as many people up and save as many people as we can. But not everyone's going to make it.
So I started this podcast over 3 years ago now with the super optimistic belief that people are going to watch this podcast. I was going to change a lot of people's minds. They were going to wake up. They were going to exit the fiat system. They were going to buy Bitcoin. They were going to self-custody Bitcoin. And we were all going to hold hands and sing Kumbaya. And as I've gone through this journey and interacted with people in public as well as online, I've realized that, just as Matthew said, like, most people they're not going to get it. They're not going to be saved, and they never were. And I don't know why I was so naive to think that they would be. Maybe it's because of my own, naivety of thinking that if somebody like me can have the light bulb go off and see how disgusting and vile the fiat system is, and get the deep understanding that I have of the debt-based Ponzi scheme and how it just devalues your time and energy over and over, and finally the light bulb goes off, and why I struggle and others that I care about struggle, and that it's just meant, it's set up that way for us to do that. It's not a bug, it's the feature. And realizing that, and then seeing why Bitcoin was created, and, coming out of the great financial crisis, and it's all lines up perfectly, and do the study and the research, and and you realize Bitcoin is the answer, but then you have to have two qualities that most people do not have. And for most of my adult life, and even at sometimes in other aspects of my life, I do not have, which is patience and discipline. But for some reason with Bitcoin, I do. If you don't have those two, you can't make it. You're going to search for, the squirrel. You're going to chase equities. You're going to chase real estate. You're going to look for the next hot AI stock, and you're going to put your money on Robinhood, or you're going to bet on Kalshi, or you don't have the patience to sit around and watch an 80% drawdown, even though you have the scarcest asset on the planet, and you have something that future generations are going to look back and say, man, you could have got that for a couple $100 like I did, or a couple $1,000, or under $100,000, or at some point in time a couple $100,000, when this thing's probably worth millions in the future. Because like we say, it either goes to zero or it goes to infinity. There's nothing in between for an asset with the qualities of Bitcoin, which is the only asset we have that's scarce. Nothing else comes even close to the scarcity level of Bitcoin. For all the great qualities and scarcity of gold, for all the great qualities and scarcity of silver, and people say real estate is scarce, it's really not. Let's just be honest. You can print more stocks, you can make more houses. don't have enough time to get into all that stuff, but the true value properties of Bitcoin are what they are. It's programmable, no centralized players, all that stuff. I'm not going to adjudicate that. If you want to put this tweet on the screen, we can kind of like land the plane here. Fred Krueger, who is a big guy in the Bitcoin space on X. He does a lot of spaces. He's very smart. He has talked about shitcoins, which I don't respect, but I respect somebody who's smart, and I respect somebody who talks well about Bitcoin, and he does. He posted, and I was responding to this at the gym about a half an hour before we went live, and he posted, selling 32 Bitcoin, which he's talking about Saylor, proved several important things. Posting buying bonds was a bad idea. Selling any amount of BTC was a bad idea. Cutting to 6 months of dividend coverage was a bad idea. Posting ads on how STRC held its peg was a bad idea. Odds of S&P 500 inclusion, 0%. Before I read this, if my mom is watching this podcast, I apologize in advance, but I'm going to read my response. Respectfully, on behalf of all the humans Bitcoin was created for, aka the nobodies, aka the guys living in the middle who always play from behind in this debt-based system, we don't give a fuck. Fuck MicroStrategy, fuck Wall Street, fuck any and anyone that anybody thinks Bitcoin needs. I'm more and more convinced that me and others in this generation are the sacrifices for our future lineage who will be the ones who benefit. Those of us with the fucking brains and balls will kill it for the next generation and everyone after. For the rest, who cry on every fucking dip and price watch like a timepiece, it's old. Signed, an absolute fucking nobody. That's what I am. That's how I start this podcast off. Hardest working nobody in Bitcoin. I'm nobody. I'm nobody special. I don't have tons and tons of followers. I don't know anything more than any other average Bitcoiner. I just did the work and study, and I understand what Bitcoin is, and I'm not fucking selling, to quote Jordan Belfort from Wall Street. And I really believe what I tweeted here, that more and more I believe, and I posted something on Facebook a couple days ago as well, that I'm probably never going to experience being rich and wealthy, because Bitcoin is probably going to take much longer than any of us really wanted to. But if I have the conviction, the discipline, and the courage to hold on, it will be the greatest gift that I can ever give to the next generation of my family. When that generation looks back 20 or 30 years from then and says, man, you could have had Bitcoin for that price, or you could have accumulated Bitcoin, period. Because it's a scarce asset. There's only 21 million. 20 million plus have already been mined. The next 115 years, the last 1 million tokens will be mined. And every 10 minutes, a new block is set out and a new batch gets set out into the public. So at some point in time in the future, people are going to look at this thing doesn't go to zero. It's not 100%. Even as convicted as I am, I understand and respect that. But if this thing doesn't go to zero, there is no top. There is no top for this thing. It continues to go up forever and ever. If people are still using Bitcoin in 2140, the year 2140, when the last Bitcoin is mined, if people are still using it then, and those block rewards are 1 Satoshi, there's 100 million Satoshi in 1 Bitcoin. The block reward will be 1 Satoshi. The value that Satoshi is going to have to use the energy to mine that Bitcoin is not even fathomable in 2026 mined brain dollars. You can't fathom that. In the future, Renalis of 115 years from now are going to look back at me and be like, what a motherfucking savage he was. What kind of balls and brains he had to hold on through all this nonsense. So people are tweeting, not watching his podcast, talking shit about him, and he's on here on the internet, in the ethos, talking about Bitcoin like it's the greatest thing since sliced bread, and nobody is listening. As always, ladies and gentlemen, as we end every single podcast, don't trust, verify. And if you're in the Western New York area and you want a new car, go see my boy, Austin Martinelli, because I promised him yesterday I'd shout him out on the podcast. Don't trust, verify. Peace.